Hello traders and welcome in our new weekly analysis session for today. Today is Monday, the 8th of July 2024, and I'm Mohammed Yaoud, the Chief Markets Analyst at PU Prime. Of course, as usual, we'll have a look on the markets today. We'll provide you with our expectations for the week. What do we have on our economic agenda during this week that we should pay attention to? And of course, the technical analysis. What do we have as per the technical analysis? What are our expectations, how to trade the markets, and how to make money during this week. So today will be hopefully a useful session. If you have any questions, please leave it in the comments section below, and I'll make sure that by the end of the session, everything will be answered. So good morning or good afternoon to you all, whether you are east or west. I can see we have some many attendees for today. So yeah, let's start by having a look on the economic agenda for this week. And before we dive into the economic agenda for this week, let me give you a brief hint of what happened during the last week, especially on Friday. So basically on Friday, we had the NFP numbers, which is the non-farm payrolls coming out from the US economy. And as we said, this is the most important economic indicator that comes out from the US economy, especially when it comes to the employment and unemployment numbers. So yeah, let me get you the numbers here real quick. So on Friday, the 5th of July, we had those numbers, the non-farm payrolls, okay? The numbers, which were 206,000 new jobs in the non-farm private sector. A lot of traders, they sent me text messages, okay, it came higher than the expectations. Does it mean that's basically good? Does it mean that the labor market is strong? I said no. That's for two reasons. If you look on the previous number, the previous number is written here in red, okay? So it's 218,000. When you click on it, okay, or when you just put your mouse on it, it will say to you that it has been revised from 272,000 new jobs. So what happens usually is this month they announced the numbers for the previous month, okay? So on the 5th of July, we had the numbers for June. What happens is sometimes, most often than not, when a number is announced, so for June, we have 206,000 new jobs. This is not the final number. Maybe in the next report, in the next month, they will revise those numbers either to the downside or to the upside. It's like making sure that they got the right number, okay? So this is 206,000 new jobs. Markets didn't really pay attention to this. Although it shows here as positive, because it's higher than the expectations, it's still lower than the previous number. And the previous number was basically revised to the downside. So the previous number was previously announced at 272,000 new jobs, and it has been revised to 218. Not only this, so also the previous month, or I mean, those numbers were for May. May numbers have been revised, and also April numbers have been revised, which means numbers are getting lower and lower. The economy or the labor market in the US economy is weakening. New jobs are falling, which means that the economy as a whole is weakening. That's number one. Number two, when it comes to the unemployment rate, the previous figure was 4%. It was expected to remain the same. However, it went slightly higher to 4.1%. Unemployment rate going up, new jobs going down. This means that the labor market is weakening. Weakening labor market means that the Federal Reserve might start to consider rate cuts sooner than expected. And that's why just after this report, markets are now expecting, with a confidence level of 75% probability, that we might have our first interest rate cut in September meeting, okay? So this is how this reflected on the markets. And that's why we had an upward move on gold and a slightly downward move on the US dollar. So currently, markets are tilting towards an interest rate cut in September and the second interest rate cut to follow in December. However, as we know, as we agree, we will always pay attention to the comments from the FOMC members, from the Federal Reserve Board members, and let's see how many of those we will be having during this week. And before also we go and dive into the economic agenda for this week, let me tell you that we have something that will affect the markets, and it's not even there on the economic agenda. It will be the results of the French elections and the British elections. So what happened in the British elections was a clear win for the Labour Party, led by Keir Starmer, who is now the Prime Minister for the UK. And this is something really bullish for the British pound and the UK stocks, or the UK stock market. It's really bullish. A Labour market, the Labour Party hasn't been really in control for the past 14 years. It has been always been the Conservative Party. So a new political, let's say, party leading the UK in the next period is something markets seem as optimistic. We will have a fresh leadership, a fresh political party to take control. And even more, regardless of the election results, the UK economy is going and is doing good at the moment. We have the CPI numbers, which is the inflation numbers, getting back to 2%, which is the target. And this is the only country in the G7 countries to reach the inflation target after what happened with the inflation going crazy all around the world. And the UK especially, it was the only country, I believe, which had, I mean in the G7, which had inflation numbers more than 10%. It's a double-digit inflation. It was just a disaster. However, they have managed to make things back under control, and now the inflation in the British economy is 2%, which is really good. When we talk about other leading indicators in the economy, such as the PMI, consumer confidence, investor confidence, everything is just bullish, so bullish in the UK economy. So this is really good, okay? That's for the British economy and the British election results. It's a clear win. It's really bullish for the economy. It's really bullish for the Britain pound, and we expect more on this. And we will also have a look today on the FTSE, which is the UK stock market index. Maybe there would be some buying opportunities, because when the general sentiment is really, really bullish, I know we don't really look at the FTSE, but why not? Maybe you have a good buying opportunity with a good risk to reward ratio. So let's look on the FTSE today. The other part, which is the French elections, it's a disaster, okay? What happened was Emmanuel Macron so far placed second, and the overall election results, it's a hung parliament, because no party managed to get 289 seats in the parliament. So no majority, no one will be forming the government. So far it will be like a coalition or a cooperation government, and so far it's a hung parliament. So a lot of uncertainty in the French economy, and it will definitely affect the euro, because the euro has been trading negatively to start the week. And if you're asking why, it's basically what's happening in the second largest economy in the eurozone. Whenever something, of course, we know that the first largest economy in the eurozone is the German economy, followed by the French economy. So if there are a lot of uncertainties and trouble going on in the political landscape, you know, in the French elections, it will definitely affect the euro negatively. And that's what we will be following up closely during this week, just to make sure that we are not over risking on the euro. Let's start by having a look on the economic agenda for today. Nothing to look for. Maybe the consumer credit is something that we, you know, not really important, but just out of, you know, curiosity, we can have a look on the consumer credit. And consumer credit, whenever it goes higher, I cannot say it's a leading indicator for inflation, but it definitely says something, because if you are a consumer and you're buying things out of credit, this means that you really want to buy things and you don't even have the money for it. So it's kind of early indication that inflation might be going higher, okay? Because when you take out credit, you want to buy, you want to spend, you want to consume goods and services, and you don't even have the money for it. So it's not really, let's say, I wouldn't give it like 7 or 8 out of 10 of importance. Maybe 3 to 4 would be fair. And this is the only thing that we will be looking at for today when it comes to the economic agenda. Nothing really else to look for. Moving on to Tuesday. Eurogroup meetings. Okay, we will start by having some comments from Federal Reserve. So we have Barr speaking. Tomorrow we have Jerome Powell testifies. Is it a 2-day? Oh, okay. So Jerome Powell will be testifying in front of the Congress. That's a 2-day testimony. It starts on Tuesday. We also have Janet Yellen speaking. She's the Treasury Secretary. And we have Bowman. So yeah, let's say that Tuesday will be a very, very important day to look at the comments by the Federal Reserve members and of course by the chairman, Federal Chairman Jerome Powell. He will be testifying in front of the Congress 2 days. What happens usually in this testimony is that they ask him, what do you think of the US economy? How will you support the US economy? What's your insights on the inflation, on the unemployment? They just ask him a lot. It's somehow like the press conference that happens after the FOMC meeting. However, there is a difference when you get asked by journalists and when you get asked by senators and congressmen. It's a definitely different, tone. The questions are more important. They ask a question. If not answered properly, they ask it again and again until they reach some kind of answers. So it's really quite hard for Jerome Powell to navigate those questions. Sometimes he might slip out something he shouldn't have said that maybe. So yeah, we will be having an eye on this testimony. It will definitely give an insight on the US economy, especially that we had the NFB numbers on Friday, which was somehow in favor of cutting interest rates. And so far, we haven't heard anything from anyone from the Federal Reserve. And we don't even have today any comments. So tomorrow, let's say, the testimony for Jerome Powell in front of the Congress will be one of the first statements to the media about the latest NFB reports. This is something that we definitely should keep an eye on. And of course, Treasury Secretary Janet Yellen and Bowman as well. We also have the EIA short-term energy outlook, given the crazy moves that we have been seeing on the oil prices lately. It's something, of course, to look at during this week. And that's to wrap up Tuesday. Moving forward on Wednesday, we have the CPI numbers from the Chinese economy. And we don't really follow the Chinese yuan. We just have a look on the numbers from the Chinese economy just to know how the global economy is performing. And we have the interest rate decision by the Reserve Bank of New Zealand, expected to keep it at the same 5.50%, 5.5%. And we have OPEC monthly report, Bank of England member Bill speaks. Okay, this is important because currently, as we explained by the beginning of the webinar, the UK economy is doing really good right now. Inflation under control. Leading indicators for the economic activity is bullish and positive. We have good consumer sentiment, investor sentiment. We have purchasing managers index going higher. After the elections, I should say again that the sentiment overall is bullish. So we will start focusing with comments from the Bank of England members, because it's not, we are no longer asking the question whether the Bank of England will cut interest rates or not. They definitely will. It's all about when. Okay, so when could somehow be interpreted from the comments from the Bank of England members, and we will be having the first to look for on Wednesday. Okay, another testimony by Federal Reserve Chairman, which is the second day. It's the same testimony on 2 days, Monday, Tuesday and Wednesday. We have the crude oil inventories haven't been so important for the last week. Another Bank of England member, Mann, will speak, and Bowman will speak again. So far, let's say the most important thing that we will be looking for during this week should be the testimony by Jerome Powell in front of the Congress. Other than that, just tiny things to look for. Moving forward to Thursday, it's the big day of the week. Why is that? Can you notice? Real quick. Yes, it's the CPI. It's the Consumer Price Index for the US economy. It's the inflation. And although the Federal Reserve doesn't really care about the CPI anymore, or let's say it's not the most important measure of inflation according to the Federal Reserve, they basically look at the PCE. But the markets, investors and traders, they just got used to the CPI so much that you will always see that the reaction of the markets to the CPI is higher than the reaction to the PCE. Although the Federal Reserve said more than once, we are looking at the PCE, we're not looking at the CPI, but it's just, standard practice of the markets to trade the CPI and to look at the CPI, considering it to be the most important. So it is what it is. We will just, follow up and expect so much volatility during this. The core CPI is expected to remain the same, around 3.4%, where the headline CPI is expected to show a slowdown to 3.1%. Basically, the monthly figures aren't that much important. We will only be focusing more on the yearly numbers. So the CPI on a yearly basis and the core CPI on a yearly basis. We also have the initial jobless claims. We have another comment by Bostic. We have the monthly report by IEA. And nothing more. So yeah, let's say it's the CPI day. Nothing else to look for on Thursday. So just to sum up quickly what we will be looking for during this week so far. Monday, we have nothing to look for. Tuesday and Wednesday, we will be following up Jerome Powell's testimony in front of the Congress and a few comments by other FOMC members. And on Thursday, it's the CPI from the US economy. Moving forward to Friday, last day of the week. Nothing so far. The PPI or the Producer Price Index is always announced, or most of the time it's announced the following day after the CPI, and it's important. Okay, people might say, okay, the CPI is more important. In my personal opinion, no, the PPI is more important. As we said previously, the PPI is the Producer Price Index, so it measures the inflation which producers feel, not the consumers. And if the producer is facing higher prices, eventually he will have to raise his prices for the consumer to, manage his business. So if you're, let's say, if you're a factory, okay, and you're producing something to sell it to the final consumer, if the raw materials that you are buying to produce your material or your goods or services is becoming more expensive, so you bought something for $20 and now it's for $30, okay? Eventually, you will try to move up your prices higher so you can compensate for the higher costs for the materials that you use. So the PPI is somehow a leading indicator for the CPI, because the inflation that the producer feels will somehow shift later or sooner to the consumers. That's why we look at the PPI, not because we care about the producers, but just because we care about the consumers. And we know that producers will not, pay for the extra prices from their own pockets. They will raise the prices, eventually shifting this inflation to their consumers. So yeah, that's what we will be looking for and nothing else. maybe the consumer expectations, consumer sentiment, yeah, it doesn't really have immediate effect on the markets. Okay, again, Monday we have nothing to look at. Tuesday and Wednesday, it's the testimony by Jerome Powell, a few comments by FOMC members. Thursday, it's the CPI day, and Friday, it's the PPI day. On average, I would give this week maybe 6 or 7 out of 10 of importance. So yes, we can trade technically, we can have some good setups. We don't really expect that much volatility in the markets. And yeah, we can be safe in the markets, except for the Thursday CPI, let's say. It's the most important thing to look for. Moving on to the technical analysis. And let's see what we have. Okay. Let's start by the dollar index. Okay, guys, we will be having a look on the dollar index, the euro, the pound, the dollar yen, and the most important things that we usually look at. However, if you have any questions, please leave it in the comments section. If you have specific pairs that you would like me to look at, just leave it in the comment section and I'll make sure that everything will be answered by the end of this. Hi everyone, thank you for leaving those comments on the chat. Starting by the dollar index, we are just still moving in a sideways range, okay? And yes, if you're asking, I'm looking at the 8-hour time frame. Why is that? I have been testing the 8-hour time frame for some time right now, okay? And it's just phenomenal. It really is the sweet spot between the daily time frame and the 4-hour time frame, because the daily, it gives you a big picture. It neglects some, details. So in order to look at the details, we usually go down to the 4-hour time frame. However, I found that the 8 hours gives you some details, just cancels a lot of the noise on the 4-hour time frame. So it's the sweet spot that we will be looking at. Gold analysis for the week, please. Of course, I can never do a live session without speaking about gold. People will just, be crazy here because everyone, trades on gold. On the weekly time frame, the previous week was just bearish, 100% bearish. We've lost around 1% on the dollar. And on the weekly time frame, we don't really have any support. The nearest support is 104.60, okay? And we still have some room to move lower. Of course, if you are following me for some time, you know that if we are bearish on the weekly time frame, this candle, which is the current week's candle, is not supposed to go down directly. Okay, we are bearish on the weekly time frame, but we always give it some time for the weekly candle to go up a little bit, form the higher wick, and then move down. So yeah, we are bearish on the weekly time frame. It's just not maybe it's not the time to sell right now. On the daily time frame, what do we have on the daily? A clear bearish move. We broke below some recent support, which was 105.15, and I think it might be time to retrace a little bit, because we have really had some pretty moves to the downside. We broke below support, so I believe if we are gonna continue heading lower, we must first have a retracement, retest the support as resistance, and this retest will basically be the higher or the upper wick on the weekly time frame, and then we can move lower. So again, it's the same bias like the weekly. We are bearish generally, it's a downward trend, but maybe we will be heading higher just for a retracement, just to retest those levels as resistance and come back lower. So on the 8-hour time frame, nothing really much going on, but the previous candle is bullish. The current candle is forming a new higher high and a new higher low. So yes, we might be starting the correction higher here on the 8-hour time frame, and on the 4-hour time frame we are already we're starting to have some bullish moves here, or the bullish momentum. My whole point is that we didn't reach support yet, but yeah, maybe we won't reach support after all. On the 1-hour time frame, of course, you will start to see some bullish divergence here. Multiple bullish divergences is something that might start an upward move. Okay, so currently what we will be doing on the dollar index is just wait for a retracement to test the levels of 105.15. On the 1-hour time frame, we can see we are already moving in a sideways range, and I don't really believe we will be breaking below the levels of 104.82. From those levels, we might expect an upward move, 105.15. After forming bearish price action from here, we might start adding to our sell positions on the dollar to continue the move lower. What is happening on the euro? Okay, the euro, let's have a look on the weekly time frame. The weekly is bullish. The previous candle is really bullish, but the current candle is bearish. We started the week with a downward gap because the previous candle ended here higher, around 1.0837. The current week's candle started lower, around 30 pips lower on a gap. So even if we are heading higher, I believe that this downward gap by the beginning of the week is bearish, especially that technically, I know this happened due to the French elections, and as I told you, it's bearish on the euro, but generally, and on the technical chart, we are already near resistance. Okay, so we touched resistance during the previous week, and this week we started with a downward gap. I think the euro is bearish. That's on the weekly time frame. On the daily time frame, there is nothing we can say. It's an upward move, higher highs and higher lows. This candle is now confusing, but generally we are in a selling area because this is a pattern that we have been trading in for some time, and I think we might be looking, I mean, it's not a short position right now, but we are looking for some shorts from here. The 8-hour time frame, it's still the same. Bullish. Okay, it's too late to buy and it's too early to sell, but generally I'll be looking for shorts on the euro during this week. And yeah, do you see this liquidity here? 1.085. This is an area of liquidity. We came back to test those levels, so I think this level will be within this downward range that we are looking for shorts around. And yeah, I think we will be just moving high a little bit and continue the move lower, or on the other side, a break and close above those levels is something we will be targeting. A move higher to 1.08 or maybe 1.09. Yeah, so the make or break level on the euro versus the dollar during the week is 1.0850. 1.0850. Yeah, a move higher is definitely a move to 1.09. A move lower is a retracement. And we can basically do both. can move higher or move lower from here for a retracement and a break above. And this is the most probable scenario. The most probable scenario is the euro will be gaining strength against the US dollar, especially that the US dollar is expected to continue moving lower, which means higher for the euro. So yes, we might see, so generally the euro is bullish, okay? We expect a continuation of this trend, and we expect to come out of this whole symmetrical triangle that we have been trading on or inside for a long time, since July of last week. However, I don't really believe that this will be taking, or we will be just breaking above easily. I think we might see some retracement first and then continue the move higher. And I would really love to see this supported by some comments from the Federal Reserve that they will be starting cut rates soon. The pound, as we always say, the pound is a little bit ahead of the euro. It already broke above this symmetrical triangle. Okay, so it's pretty much like the same we have on the euro, but the pound already broke above, and not only broke above on the weekly time frame, but we had a great weekly candle close. Given all of the bullish reasons and bullish sentiment that we have talked about by the beginning of the webinar, I believe the pound will definitely continue higher. It's just a question of when can we buy this. If you are not in this trade, where can we buy this? Of course, it's again too late to buy. We are just nearing resistance. So the next resistance will be 1.2860, okay? We will be waiting for the pound near those levels, I believe around here. A downward retracement is expected and we will break higher. Pretty much exactly what we expect on the euro might also happen on the pound. So a slight move higher to the levels of 1.2860, a retracement, gaining momentum to gain more bullish momentum and just break above higher and continue the move to the upside. Again, especially that we expect the dollar to continue moving lower with the rate cut speeches, okay? The dollar yen is just really bad. However, the dollar yen on the weekly time frame, what you can see is a doji candle here. So for the past 3 weeks, we were just moving higher. And the previous week was just open 160, close 160. Literally the whole week, we just gained 2 pips. 2 pips on the dollar versus the Japanese yen. This is something that should tell you, first of all, the upward momentum is weakening. Second of all, we might see some correction. Of course, we will continue moving higher. It's not a correction, or it will never be a reversal without an interference by the Bank of Japan. However, the weakening US dollar, now you're looking at a pair where the dollar is weak and the Japanese yen is weak. So you get this kind of weekly candle. During the week, and the weekly candle already broke the previous one. So it already started, bearish. So I think we are just looking for a high here and we will continue moving lower. So it might be a retracement week for the dollar versus the Japanese yen, not because the Japanese yen is weak, but just because the dollar, or not because the Japanese yen is strong. It's not, it's weak. But maybe this week the dollar will be weaker than the Japanese yen. And yeah, we can see the daily time frame here, the last two, that's the previous week, 1, 2, 3, 4, 5. So it was only one bullish day, a doji, a long-legged doji, and 2 bearish candles. It's bearish. It is bearish. We might see some correction. Okay, so what the dollar yen currently is doing, It's just a consolidation on the 4-hour time frame. So maybe I'm looking at something like this. Maybe. Okay. My sell position will be a break and a close below this. 160.35. Why is that? You can see how many times we had bullish support. So maybe above those levels we will just be trading in a sideways range. I really don't know. Maybe we'll just be breaking above resistance and continue moving higher if the Japanese yen is really that weak. I don't know. However, to me personally, I will be waiting for a break below 160.35 for a short, a break and a close. Maybe I'll then think of shorting the dollar Japanese, but till that time I'll just be waiting. I would not be really thinking of a buy. Maybe we can buy. On the short time frame, we are heading higher for the 161.26. Okay. The dollar yen is interesting because we can have both opportunities, whether a buy or a sell. If we broke above 161.26, I think we can head higher for the high around 162, let's say, or as we said, a break below 160.35 is a short position. Between those levels, 161.30 and 160.30, let's say we can do nothing. It's a sideways range inside of a correction. So yeah, we will be ready with both scenarios, either a short or a buy, given all of the conditions we have explained. The dollar Canadian is doing nothing. We just reached support. I don't really trade the dollar Canadian, dollar franc. Okay, let's have a look on gold. Absolutely bullish. The break that we had during the last week was great fresh momentum here. What's happening right now is definitely a retracement. We can expect this retracement. It's totally normal. And I think we will be heading higher for the 24.30. Okay, this is something that we will be looking for. This was a liquidity here, got taken out. Liquidity got taken out. I think we will be heading for this liquidity up here. So it's just a matter of where can we buy gold during this week. And to answer this question, we will do two things. First of all, we will be looking at supports and resistances as well as Fibonacci. No, this is not the Fibonacci retracements. Let me just do this quickly. Here we go. Right? Yeah. So the 38.20% Fibonacci retracement is a price action of support. It's just around 23.55. Okay. The following one is 50%, not so important, and the 61.80% is definitely of interest. So Fibonacci helped me have a look on two possible support areas that we might have during this week. The 23.55, sorry, and the 23.30. What I will do personally is I will just wait. I'll just wait for prices to go down to the 23.55, or maybe. But this is some, not advanced, it's risky, okay? Maybe I'll be looking for some short entries, intraday entries on the gold, but it's risky because it's counter trend. The other scenario would be just wait for prices to go lower to 23.55. If we had bullish price action from here, we can buy, aim for 2400, 2400, or from the levels of 2330. So I'm generally bullish on gold. I'm just waiting for a retracement for a great buying opportunity. Okay. Yeah. So the weekly candle is just going lower to form the lower wick. And once we go higher again, the sky is the roof. The sky is the limit. Okay. Let's have a look on the Dow Jones and the oil. The Dow Jones is doing absolutely nothing. On the weekly time frame, it's just an inside candle. We haven't really broken above the resistance, the previous high or the previous low. So although it's bullish, but it's a shy bullish. So no bias really on the weekly time frame. On the daily, silly candles, just really silly. The only thing that would be really great on the Dow Jones is a break above 39,470. This is a great resistance. Once we break higher, you see this, we will go and head for maybe 40,000 on the Dow Jones. Other than that, we will just be waiting. And yeah, it makes sense. It makes sense because we're having higher lows. Some sort of a wedge here is in formation, and the middle line of this formation is somewhere around here, or maybe like this. So yeah, you can see some price action here around the middle line. Once we move higher, we are moving, to target the 40,000 points. I'm basically slightly bullish on the Dow Jones during the week. So yeah, I think that's all for this session. I think we have, covered pretty much everything that we need to cover. If you have any questions, please leave it in the comments section right now. I'll have 2 minutes and I'll call it a day. Okay, I think we are receiving the thank you part. This means we are done here. Okay, thank you very much for tuning in this session today. Of course, it will be, do you think NLG is a good investment? What is NLG? Can you just comprehend more? Do you have a question? Will you be doing lessons or sessions on how to use price action? Yes, pretty soon I'll be having a webinar to explain the basics of market structure. And yeah, after this I'll be doing more on price action. Natural liquefied gas. I don't really look at natural gas so much. It's not even here. Yeah, maybe I'll have a look on it after the session. I'll drop it on our Facebook page or something. So yeah, I think we are done with the questions. Thank you very much. Thank you guys, and I'll see you again during the next week's webinar. Thank you so much. Please stay safe and trade safe.